So we've started the webinar and the live streaming has also been started. So we'll just wait for a few more seconds and we can see the number of participants increasing. So we'll wait for about 10-15 seconds and then we'll start. Yeah, so we've reached a good number. I guess we can start now. Yeah. All right. So good evening, everybody, and welcome to the second webinar in the IMA Consulting Alumni Special Interest Group webinar series. As many of you know, the Alumni Special Interest Groups at IMA are platforms that bring together alumni, faculty, and students and leverage the collective intellectual resources engaged in areas such as healthcare, education, technology, analytics, public policy, entrepreneurship, etc., to bear on some of the most challenging issues of our times. The ASIG platform itself allows faculty and alumni to collaborate with each other much more intimately and to engage with industry and practitioners in a much more multifaceted manner. To facilitate this, of course, we have created 15 such ASIGs at the Institute and more will follow in due course. The Consulting ASIG webinar series brings the thoughts, views, and expertise of renowned experts to the IMA community. These are structured either as panel discussions or as dialogue between eminent speakers and a few other formats. To come to today's discussion, it just feels like, a few years ago, fintech would not have been a term that many would have been familiar with. But now it's very different. And so much so that the change has taken the form of massive disruption for the incumbents. And of course, it has forced them to get on their toes and address this in full earnest. With mobile penetration, of course, and into the hinterlands, financial services and fintech now have the unprecedented opportunity to have a massive impact. And there has been constant evolution and constant reinvention of what's possible as part of the services that are being offered. To share their views on this rapidly evolving and dynamic topic, we are very happy to have a distinguished panel today. The discussion will be moderated by Mr. Saurabh Chandra. Saurabh is an IMA alum and he's a managing director of Boston Consulting Group India. He is a Bay Area expatriate with 20+ years of experience, industry experience. His last few assignments have been as CTO, country head for Visa, JPMC, Amazon, Flipkart, and Oracle. He's been a founder of LetsVenture in Silicon Valley and exited successfully. He sits on the board and advisory for 3 companies. He holds 4 patents, 3 copyrights and trade secrets with financial institutions, and 5 research papers, and is also an author of 2 technology books by McGraw-Hill. I will let Saurabh do the honors and introduce the panelists. To all the panelists, please send in your questions in the Q&A section, and we will try to, get those addressed. But please be patient with that. Now I hand over the platform to Saurabh to take over the proceedings. Over to you, Saurabh.
Thank you, Professor Anurag. Very good evening to all eminent panelists, current students of IMA, IMA alums worldwide, respected professors and IMA administrators, and everyone across India and worldwide who took their precious 1 hour today to participate in this conversation together. Before I introduce my eminent panelists, let me just share some brief context for the evening. As Professor Anurag said, the topic for debate today is disruption by fintech. Not only worldwide, but also in India, it's just happening in the most rampant speed. If you take a demographics of fintech in the country, India is today 3rd largest, fastest growing fintech market in the world. It is growing at 67%, in the last 3 years. It has more than 2,100 fintech entities, which has got set up in the last 5 years. No surprises, Bengaluru and Mumbai, they have been one of the most active fintech headquarters, but obvious because of their technology and financial prowess. Last year, there were 33 new fintech investment deals worth 647 mil, and but obvious in dollars. Wherein at the same time, this is a statistics about June 2020, wherein at the same time in China, it was 284 mil. Now you can understand that how important this space is for India, and world is watching. India's fintech market, it is now valued at $31 billion and projected to grow to $84 billion by 2025. So these are some statistics numbers which arguably say that this particular domain has taken lots of importance in the country. And when we are talking about investments and fintech, I think three names comes very handy. One is NPCI. All of you in one way or the other would have been a consumer of NPCI. Brief about NPCI, if one has to understand, it has two very important subsidiaries, NPCI International Payment Limited and NPCI Bharat Bill Pay Limited. If you talk about Bharat Bill Pay Limited, we all every day has some or the other touch point with it, because at the end of the month we have to pay bills. Either we are a consumer of DTH, electricity, water bills, gas, etc. And NPCI Bharat Bill Pay Limited has been at the forefront of this. So NPCI is first, and we have the CEO of NPCI, Nupur, with us. On the same lines, if we talk about second very important entity in the country, it's LetsVenture. It's a deal venture platform. It has a portfolio of 2.5 billion plus today. It has 388 startups that has raised fund via the platform. It boasts of 7,000 angels on the platform, and it is one of the very few in the country which actually took a very strong stride and is going strong with Women Investor Network. And we have the CEO and founder of LetsVenture with us, Shanti Mohan. And on the similar lines, the third very important player in the country, most of us would again be a consumer of it in one way or the other, and that is Razorpay. Razorpay serves over 5 million businesses today. The company has been disbursing credit of upwards of rupees 250 crore per month. It has also been steadily growing its neo banking arm, which is known as Razorpay X, which serves more than 10,000 businesses today. It has witnessed 3x growth in the last 12 months with 40% month-on-month growth. 54% of digital transactions are coming from SMBs in tier 2 and tier 3. So one of very few internet players in the country who has been able to understand the maths of tier 2 and tier 3. And they have this delightful numbers coming up from tier 2 and tier 3. Their online transactions grew in few cities by more than 50% in the last 12 months because of the macro environment. And no surprises, one is Ahmedabad. With this, I have CEO of Razorpay with me, Shashank. So we have three very important panelists today who would be participating in this debate and discussion. NPCI CEO, LetsVenture CEO, and Razorpay CEO. We will have a reflection from the lenses of an entrepreneur, the lenses of a professional stalwart, and as well as a venture capitalist. With this, let me take an opportunity to thank Shashank, Shanti, Nupur to take this precious 1 hour to spend with us. And On behalf of IMA and whole community, I am thoroughly humbled to welcome all three of you for this panel discussion. With this, may I request Shanti to say a few words, introduce a bit of her journey, and share her life experiences till date.
Yeah, thank you, Saurabh. I'm really happy to be part of this panel. So just to kind of first set the record here, though we are a marketplace connecting founders to investors, we are not, I don't represent the investor side. I'm the founder. So I kind of more talk from the entrepreneur's lens. LetsVenture is my second venture, did my first venture in 2000, which was an embedded systems company, raised Series A and then sold the company, and then joined HP and then worked in India and the US. And when I came back in 2013, I think those were the early days of crowdfunding, early days of MOOC, right? So really kind of saw that as a very large opportunity and had a lot of founder friends who struggled to raise funding. And the opportunity was very obvious that there had to be an online marketplace which could make the process of investing both easy for founders and for investors. Very, very simplistic vision. Started off, and in the last 8 years have actually had the good opportunity to work with some very amazing founders. So our portfolio, we have about 440 companies. We also have a business which helps founders raise their next round of growth capital, as well as allows investors to do secondary, as well as a SaaS product which helps you digitize cap table and ESOP management at LetsVenture.
Awesome. And I must share this with you that the people hearing in the room, you will have a couple of them thinking now how to come on the LetsVenture platform.
Absolutely. So it's very easy as an investor. You have to go sign up a form, but there is a curation process because we ensure that investors are curated before they come onto the marketplace. And very happy to have the alumni group part of the platform.
Thank you, Shanti. Amazing. And, moving on to Nupur. Nupur has a very illustrious career from software to tech to banking to fintech. Nupur, would you like to share a little bit of nuggets of learning and journey of your experiences?
Sure, definitely, Saurabh. Very happy to be here and good evening to all of you. So yes, I was a software engineer once upon a time, and that's how it started. But I, wanted to continue my education, so went on to do my MBA. Nowadays, whenever I meet youngsters who are studying in these schools, they seem to be very, very clear about what they want to do and why they want to do it. But unlike them, I really had no such plans or ambitions back then when I joined IIM. However, a series of coincidences led me to be part of Citibank. And Citibank is really not an organization, it is an institution and an amazing training ground from where a lot of CEOs for Indian companies have come in. So I spent very fruitful 7 years there. My journey continued in the banking space from a 50 branch Citibank to 500 branch Kotak Mahindra Bank. It was ING Vesya Bank back then, to really a bank which did not have a single branch, but rather 5 lakh banking correspondents in form of Airtel Payments Bank. I've been really fortunate that I saw technology helping both the top of the funnel at Citibank and bottom of the pyramid at Airtel Payment Bank, which is where my engineering degree also came in handy because I saw banking and technology converging very fast together. Therefore, I ended up joining a fintech, really one of the biggest fintechs in the country today in form of PayU. I had multiple mandates there and really enjoyed my stint before getting this opportunity to lead MBBL. I took on this opportunity because this is really an opportunity to impact the entire country. So here I am in a role where I intend to serve the nation by creating a platform which is really for public good, and yet it is a very, very complex ecosystem play. So very happy to be here and very happy to be part of this discussion.
Thank you, Nupur. Very illustrious career. And I must share this with you that, like me, there would be numerous fans in the room who actually thank you for enabling payment of all the bills in such a lucid and comfortable way today in the country. Thank you for that. Awesome. So moving on to the poster boy of Indian fintech. I remember long term back, there was always a question of poster boy of e-commerce. Now that line has got changed, and now it is poster boy of fintech. And Shashank, you have been leading that. And may I request you to share a little bit of your nuggets and journey and experiences?
Hey, thanks, Saurabh. Thanks for the amazing introduction. Yeah, I graduated from IIT Roorkee in 2012 and spent a couple of years with Microsoft in Seattle, USA, and then kind of left my job, came to India to start Razorpay. And well, the exciting thing is, back in 2014-15, as it is today, that India has been experiencing a confluence of multiple trends, which are very much in the positive and up and right direction, right? So when we started, we kind of observed internet penetration increasing at a rapid pace, and mobile penetration increasing at a rapid pace, and a very good element that is that a lot of businesses are looking to move online, looking to leverage internet. And they should, even if they don't realize it, like they should really be thinking of moving online or leveraging internet as a great growth tool for their own development, right? And we kind of felt there's a huge lack of focus in the country towards solving for payments and digitization problems of businesses in the country, right? And we experienced it firsthand. We try to do, I kind of do a lot of side projects, so we try to get payments for one of those projects, and we had a very, very bad experience. And we kind of felt payments is a huge problem and something worth solving for and giving like our next 10, 20 years of our life. So that's how we started. And, we started out of Jaipur, and later moved to Bangalore. And we solved for a lot of friction points in online payments, which, thankfully, most businesses don't need to experience today. We cut down on activation time significantly, cut down on integration time significantly. The kind of experiences that we design for mobile and web has kind of become the industry standard today across the length and breadth of the country. And now we are slowly expanding our horizons to solve for the same kind of problem that we have solved for payments in multiple domains of fintech for businesses. So we are building products and software and marrying good technology with banking infrastructure and solving for pain points for businesses in payroll, in vendor payments, helping them get loans very easily, provide them with a bank account which is way more intelligent and smarter than what is a typical case today that is there, right? And we are working towards the vision of digitizing every single business in India, helping them improve their productivity levels, helping them focus a lot more on their core business, and help transform the GDP of the country to be a lot more digital and online.
Amazing. Yeah, this is much needed, much awaited. And Shashank, my role demands moving across industry and verticals. And I must share this with you. In many of boardrooms, I have heard saying that what Razorpay can do, why we are not being able to do it. So that's an amazing statement to have. And I want to share this with you. With that, Shashank, one thing that comes to my mind, and I'm sure many of our friends in the audience would be thinking about it, there is a little bit of connection of CIIE of IMA and Razorpay. Do you want to shed some light on it? What's that connection? What's that warmth?
Yeah, absolutely. I think it's a connection that is not very well known or well talked about in the industry, right? So when we came back to Jaipur, in 2014, me and my co-founder Harshal, right? So we started working out of, Startup OSS. and we were incubated by Startup Oasis. And Startup Oasis is a program run by CII itself, I think in collaboration with the Rajasthan government. And it's a really great startup hub in the middle of Jaipur, and it's doing a great job promoting entrepreneurship in the city, right? So and we were part of the part of Startup Oasis when we didn't have any product, any team, anything whatsoever. We were completely starting from scratch. And the person who is running that program, Chintan Bakshi, helped mentor us in the start, helped us with a lot of introductions. And actually a lot of our initial customers we're working in the same co-working space, or we're part of the same incubation group, right? And they kind of signed on onto our platform immediately whenever our product was ready, and we kind of asked to onboard, right? So that's the small bit of connection, and I think we're really grateful for all the help that we've received from CII and Startup Oasis in the past.
Amazing. We take lots of pride when the folks who had incubated with us and become so successful, and what obvious, there's so much of hard work behind it. So on that note, let me ask Shanti this one. And Shanti, I know you have been one of the inspiration for many, including me. And this question I always wanted to ask, but maybe today is the time. When the world was thinking about incubating B2B, B2C, consumer-centric businesses, which can be very easily seen, understood, or you would have felt some pain in the regular journey, you picked up a topic which is so complex, so mathematical, so much that you have to convince somebody to put big money, not even small money. How it all happened?
Yeah, no, thanks, Saurabh. So, really in 2012, when I was looking at starting on my own, and when I came back to India, I think one of the points which came up was I had a lot of founder friends, and this was happening consistently because I was volunteering for a non-profit there too, right? Where there was no efficiency in the process of fundraise, right? And really, I would call up friends, and then I would have to repeat the same story probably multiple times to different people. But the process of fundraise was completely broken, right? That was one. I think second was that it was not transparent. There was a lot of information asymmetry. But really coming back to your question on, why did I not look at a B2C or a B2B space? Entrepreneurship is about being passionate about a problem and then going and solving the problem, right? So I was not thinking that I have to go find the problem in the B2C space, or I have to go find the problem in the B2B space. I was actually really passionate about marketplaces because I understood marketplaces really well, because I had launched HP's marketplace when I was in the US. This was in 2009. And I understood the mechanics of how marketplaces work, right? But really applying my passion towards crowdfunding and seeing how can that get applied to an immediate problem. And when I actually went and met with about 20 founders, and I asked them, tell me the top 3 challenges you have when you're starting a company. And literally 18 out of 20 said 1, 2, 3, funding, right? So they say, if you can help us just find the right investor, it would be actually half the battle won for us, right? Because it was very difficult to discover the right investor who should actually invest into my startup. And from the investor perspective, thankfully, I was not an investor. I did not understand angel investing very well. And because I believe I would not have started LetsVenture had I been an angel investor. Because literally every investor I spoke to was a little doubtful. They said, do you really think there was no Paytm, there was no PhonePe, there was no online payment then, right? And people said, do you really think people are going to write 5 lakh checks online, looking at a pitch which they're going to look at on the marketplace, right? So really there was a lot of questions from investors. But as a founder, I knew this was a very, very big problem to be solved, right? So really did not think as much as, what is a sector, but really thought that this was a very, very pertinent problem, felt very passionate about solving that problem. And with a very simplistic vision, we launched LetsVenture as a technology first platform, right? So it was not like we tried to do deals offline and then we tried to bring it online, because our thesis was that we want to bring investors who want to use technology to connect to startups, right? You could, if you are an investor who wants to talk to them offline, then we are not the right platform for you, right? Because we were really trying to look at the technology first, digital enablement of the discovery process between investors and founders.
And I must say, Shanti, whole country, thank you for doing this.
No, thank you.
It has been such a pertinent problem. I myself, when I was running my startup, the first fund,
Yes.
that got a green hit after ratio of 1:12. And by after crossing 10, you start feeling, are you doing the right thing or not?
Yes.
Now, at least with you being around, I'm sure many in the room will get energized and they exactly know, where to get the guidance from. So thank you, Shanti, for that.
Yeah, so I have to add just one more point is when I was actually raising Series A, one of the VCs asked me, why should LetsVenture exist? And I had the only question is that, tell me what happens if LetsVenture does not exist. And then he said, yeah, really, actually, I think that we need platforms like LetsVenture, right? So the point is that will you be missed if you're not there? And that's the only question we ask ourselves as a team at LetsVenture every day.
Very true, very true, very well said. Amazing. So moving on to Nupur. Nupur, your insights, and you have been in the journey of seeing this whole growth in the industry. Why did fintech become a phenomenon in the first place itself? Why didn't BFSI sector do something not to make it happen? They had everything with them. What's your take on this? How you see it from your lenses?
Thanks for asking the question. And I think the banks were indeed the original fintechs, right? And they were the original innovators. Think in terms of the debit credit cards, think in terms of ATMs, call centers, so on and so forth. I think somewhere around the 2008 crisis is where the regulations and the compliances slowed them down and they somehow dropped the ball. So that is one school of thought where we saw a time where the banks slowed down innovations. However, the consumers were adopting technology. That was a time when iPhones and iPads and laptops were certainly gaining traction. So there was a gap created of sorts where a lot of startups, which we now known as fintech, but I don't think the word existed 2 decades back. A lot of startups saw the opportunity of unbundling the entire banking services and started filling the gap through one specialized solution after the other. And since they were working on a very specific niche area of solution, they could be more efficient, they could be faster, they could be cheaper. And therefore, the consumer adoption suddenly skyrocketed. The other school of thought also comes from my favorite author, Christensen's Innovator's Dilemma, that while the banks continue to work on sustainable innovation, they somehow overlook disruption. And that's where the fintechs really took leapfrog. And they are today present across the value chain, talk about transactions, talk about savings, credit, and insurance. You have huge number of fintechs operating in all these levels. And like Shashank just mentioned, they're now moving outside of these pure finance domains into areas of business support, which will be the next wave of sorts. So that's how I think the entire banking to fintech transition happened.
Wow, loved it. Yeah, I think innovator's dilemma always creates a segue and road for entrepreneurs. And since we are talking on customer obsession, and Shashank, if you can throw some light, now in the last 7 to 8 years, anything that happens on a digital platform, there's always this viewpoint of how convenient it is for my consumer. Now, in your space, though you are the provider to the end means when consumer is interacting for payments, but you have many partners in between. And for many, you do not have a control. How do you ensure that your consumers are always happy and they always take a pride that, wow, I am operating on Razorpay and it will be secure, safe, and lucid?
Uh, payments is definitely a very, how to say, like very layered platform, right? Like we are operating on top of bunch of banks and wallets and different payments applications that are there, right? See, I think what has worked well for us is just sharing transparently with all the businesses and customers as to what is the status of a transaction that is happening, right? Making the whole experience as easy as possible. See, while there's a whole backend infrastructure behind it, I think what we really changed was the front end part in a very strong way, right? So I remember when we started, I think 2G was still pretty popular back in 2015, 16. And we worked a lot on the engineering side to ensure that the transactions go through even with flaky networks and network disconnections. And some of those still happen even today in bad network areas that are there, right? We worked a lot on providing good customer support, not just to our businesses, but also to the end consumers that are there, right? So that they can inspire a lot. I mean, so just to inspire a lot more trust and not just the brand, but the overall digital payments ecosystem as well, right? And for that, like we have had a very strong word of mouth, in the startup and SME community around Razorpay. And even today, I think close to like 35% of our customers come completely via referrals and via word of mouth that is there. I think third, I would say is beyond the technology part and beyond the customer education or customer support part. I think the last thing I would say is around the people itself. I think we try and expose everyone in the company, towards the customer problems and help them understand like what is the exact impact that they're creating on the ground, what are the problems that they're solving for it, and it helps build tremendous amount of customer empathy, right? Which I think a lot of large organizations at scale, probably fail to do in a systematic way, right? And the people who are kind of building products and taking them to market, are very far removed from the customers who are actually using those products, right? And when we do these kind of customer immersion sessions or customer support sessions with our engineers and designers and business people, I think they really get a flavor of like what the real India is and what they are really working for and solving for, right? And that has helped us build amazing products of very good quality, which I think like we absolutely take a lot of pride in.
Amazing. Yes, totally agree. Tech, SMB education, and people. So folks in the room, whosoever are the next entrepreneurs in the line, you have got some mantra today. And on that note, let me ask Shanti. Shanti, there has been so much happening in fintech. There are so many businesses, from across the world, Russia, Japan, Europe, Southeast Asia, that we all hear about that is happening. But you chose a very interesting disruption once again, which is the cap table. And can you shed a little bit about two things? One is, what is cap table? And second, what's the opportunity that you see that you are architecting and incubating that?
Yeah, so the product name is called Trica Equity. It is basically digitization of cap table and ESOP management for startups, right? So if you really look at when a startup is formed, and we kind of see this even in fact, growth stage companies, the entire cap table and investor information is maintained on Excel sheets, right? That is one part of it. And the second part is the ESOP grants, right? And just basically, in the last 3 years, we have seen a lot more maturity in the ecosystem in terms of people choosing to work with startups. And I think a lot of people choose to work with startups not because of the salary. They choose to work with startups because of the equity value getting created, right? And that is the process of wealth creation for people, which is non-linear, right? So I can only earn so much in salary, but if actually I work for a company and the company does well, my non-linear wealth has actually got created through the equity I hold. But really, again, there was most of the companies were managing their ESOP allocations through Excel sheets, right? So really Trica Equity is the product we created to help you digitize and manage cap table and the ESOP management for companies, right? And really that disruption was more because I believe it was very, very interesting, Saurabh, because in the last 4 to 5 years, which I have seen, there is no good data benchmarks around data in private markets, right? So for the size of private markets and for the amount of investment dollars coming into private markets, you cannot easily actually go and find data around which are the companies, which are the angel investors, what does the cap table of a company look like, right? What is a benchmark or baseline for ESOPs, right? How do you give ESOPs, right? What is a good practice for ESOP? And most of the data is like US based, right? But I think India behaves very differently. And because of that, we kind of build this product. It is a SaaS product. Today, we have close to 400 companies using it. 30% of them are Series B plus companies, right? And that really is about, again, like I said, it is about digitization and management of your most valuable asset as a founder, which is your equity, right? And that helps you manage it well in a centralized place. As a founder, you have complete view on the product. You have a complete view on, how much ESOPs is left in the pool, how much is vested. All of that view comes back to you.
So true, so true. And if I can share with you one of the company's board that I sit at, it's Shashank's alum investor group YC company. Its name is Zadl. And in the last 1.5 months, I have been working with them because they are in the aggressive fundraise zone, and then how ESOP should look like, how equities will be distributed, what's the maths behind it, how you're thinking about it with respect to future growth, or is it a short-term money? It's such a big problem.
Yeah, so we have actually open sourced all the scheme documents. We have open sourced everything on ESOP. Right, as a company and as a culture, we've already always open sourced information, Saurabh, right? So like way back in 2016, when everybody was thinking term sheets was like the biggest secret of the world, right? We actually open source term sheets, SHA, SSA, advisor equity, advisor agreement, founder agreements, right? All of that, because we believe that there is some information which has to be openly available to founders to create a very healthy competitive ecosystem, right? So you cannot have information arbitrage if you have to build a very good ecosystem. And that has always been our philosophy. And even on Trica Equity, the entire ESOP documents, scheme documents, you don't have to go to a lawyer. You can just go download and start using those documents.
Wow. This will be certainly a great delight for all the prospective entrepreneurs in the room. So guys, hope you all are listening this. Okay, awesome. So with that, Nupur, moving on to you, and this is one topic that is gaining prominence in the country as well as internationally, and especially for fintech, data. Now every country has started taking certain cognizance of data. It's very important for any country to safeguard its own data. What do you see relevance of data if any new entrepreneur is thinking about starting a fintech?
Sure. Saurabh, completely agree with you. While everyone says data is the new oil, however, the digital footprint that we leave behind makes it more amenable for the data to be exploited. What we've seen in the documentary, The Social Dilemma, is very, very real. And I'm really, really glad that the regulators and the governments are waking up to the exploitation. As we move forward, we will see a lot more of conscious effort by regulators, by government, by organizations for, on one hand, data empowerment, and on the other for a data protection architecture. And we've already started seeing a lot of that in the recent RBI circulars, which, for a layman is simply, I decide who can use my data and in what manner and for what purposes, right? So that is where we see the world moving towards, which in turn means that for entrepreneurs, there are two things which are important. One is how do you collect the data and how do you protect it, right? When I talk about how do you collect it, customer consent is important because that's end of the day what builds trust. And that is not only true for fintechs, but also us, true for other startups. Because, at a personal level, I can tell you that I uninstalled multiple apps only because they were asking for data and permissions, which I thought they did not need, right? And 2 out of 5 such apps I deleted do not exist anymore. So do not ask for unnecessary data and build trust by being very transparent about what you're collecting and towards what purpose. So that is one thing to be kept in mind. The other is how do you protect it, right? Apart from the tech infra side, it is important that you train your teams, you ensure that they do not in turn cause any vulnerability to the customer data, have an oversight, and more importantly, work with the experts and seek advice. All these certifications are important and are meant for a purpose. So definitely, seek expert advice. And if you are a fintech, please remember, we as bankers were brought up being taught that reputation risk is of paramount importance and it breaks companies. So while some of the bigger companies can get away with data breaches, as a fintech, you would have more repercussions outside of just a reputation risk. So be very, very conscious and paranoid about how the data is secured and what data you collect. So those were my 2 bits on that point.
Very well said. And since we are talking about data and tech is a very integral part of data, Shashank, this will be for you. This is a trick question for you. You have created a very strong SME business model in BFSI using tech. What do you see your company to be or foresee your company to be? Is it a tech company doing business in fintech, or is it a finance company leveraging technology?
It's both me and Herschel, come from technology background, right? And that's what we understood from day one. In fact, we're complete outsiders to payments and banking and fintech industry that is there, right? So and even today, I think we completely see ourselves as being a tech company building products for customers, right? And those products can be in fintech domain or financial domain, or can transcend different domains that are there, right? But the DNA of technology and product is what kind of continues to remain true for the company.
Very, very true. Very true. I think very well said. Tech has become very important, but as well as domain is important if we want to grow. On that note, Shanti, if I can take nuggets from Shashank and ask you, when you sit with various of the investors together or advise that where to invest, what's your optimality model? Is it a domain experience? Is it tech, or is it fine balance of both? How do you see it to be?
So really the the way you would look at a business would depend on the stage of the company, right? So I'm kind of talking about the early stage platform here, Saurabh, because the way we evaluate a growth platform on the Trica Capital platform is very different from how we would evaluate a company on LetsVenture. So on the early stage platform, actually, it's more about over indexing on team, right? So it is founder, right? Literally that. And really, when you kind of talk about domain expertise, we will really look at something called the founder market fit, right? So does the founder understand the domain he is building the product in, and how good is that founder market fit, right? So one is, do they really understand the detailed nuances of the domain? Do they understand the problem they're trying to solve? Do they really understand the customer behavior? And of course, how big is this market, right? And that would probably be some of the parameters you would use to evaluate founders. But really, having done angel investing for the last 5 years also personally, while we try to create a science out of it, which is about 80%, 80 to 90% maybe is the science behind angel investing, where you look at data, you look at all of these obvious factors. I think the main decision point happens in that last 10%, which is more of an art, right? Where you just instinctively know, or you just know that this is a founder I want to back, right? Or, let's kind of put the capital in and let's work with the founder to go discover the right solution for the market, right? Because if you were to ask an investor, did you know that the startup is going to be a unicorn when you went and did angel investing? And if he tells you yes, you should stay far away from that investor, right? Because it is very, very hard to actually forward predict outcomes, right? But what you can actually do as an angel investor is bet on founders you really like, because then you don't mind losing your capital, right? Because there is a very high probability of losing capital when you're angel investing. You would rather lose it on people you really like to work with, right? Rather than founders you don't like. So that is a more kind of a different view on how I look at angel investing.
Excellent. I'm sure many would be taking notes on this, and you'll be getting flooded with more advices. But on that, since we are on the topic of entrepreneurship, and Shashank, there's lots of global entrepreneurs today in fintech who actually are seeing the world as a single one-stop platform. For an example, Stripe, Revolut, Tinkoff, Robinhood, all one day or the other would want to come to India, as it's a very big market, as well as the big boys, JP Morgan Chase, Capital One, etc. They have started realizing that they have to double up their strength on tech, the way the fintechs think, and get into this market. So how do you see this competition evolving? Does it keep you awake?
Stripe has been in India since 2016. It's not a new story anymore, right? PayPal, entered India twice and has exited India twice in last one decade. That is there, right? See, if you look at not just the global fintech companies, right, but just global technology companies overall, right, you would see that the companies which have really succeeded in India are the ones which have effectively localized and invested a lot in the country, right? Platforms like, let's say, Amazon kind of come to mind in that sense, right? So for a lot of the global banks or fintechs, right, just copy pasting something that they have developed for US or Europe to India is absolutely not going to work, and that's what a lot of them kind of find out when they come to India and see the myriad regulations and a very different SME ecosystem, the way the country operates, and kind of has the habit for paying for software and other kind of things, right? So it's not an easy adaptation at all, right? And at this point, kind of feel like we have a decent head start, and the kind of roots that we have in the country, they go really deep. The partnerships, the understanding of the ecosystem, the tie-ups that we have with various banks, right? I think replicating those will take a significant amount of time, really, right? And we are really focused on building the next set of products, bringing the next set of innovations in the country. I think it will be good for the country, and as in general, as a term of rule, for the competition and for the innovation that will happen in the sector. But at this point, I don't think too much worried about any of the global fintech players coming in the country.
Very true, and I bet on it. I think we, as you rightfully said, depth, serendipity, the zigzag model that the country offers for all entrepreneurs, there's way more bigger room to play and take on big boys if it happens.
Absolutely.
On that note, Nupur, one question to you. And since you have seen the fastest and the highest volume of payment data, which NPCI or various of other entities that you have worked with deal with, How do you see payments landscape evolving in the country or internationally from your lenses?
Sure. Sure. So a few things we already know. I mean, there's no point talking about India stack, no point talking about the Jam Trinity. We already know that India leapfrogged one generation, and while other nations moved from cash to cards to digital, India leapfrogged from cash directly into digital payments, and they grew 10x in the last 5 years. Where the future is concerned, two things are certain: that A, there's no stopping us now where digital payments are concerned, and the only thing that will continue is innovation, and that is a certainty. In terms of what are the themes that are emerging, Saurabh, one is, while Shashank does say that we don't need to be worried about the global players, the fact also remains that the big techs are taking interest and are growing in India. So that is a theme that we can expect to emerge as they grow further. In terms of innovations and the payment form factor itself, there are two pieces I expect to definitely, create products in future. One is biometric. Biometric also because it is backed by Aadhaar, enabling not just the bottom of the pyramid through AEPS and other products, but also it is helping the top of the pyramid with the help of AI and the high-end devices. So biometric is one theme. The other theme I see is embedded finance. And we've seen the growth of FASTag. The numbers are for everyone to see, but also embedded finance in terms of wearables, IoT, AI devices, a lot of the Google Assistants and Alexas getting used for doing day-to-day transactions is another theme that I expect emergence of. And finally, one of the things that is already happening, but it will only grow in future, is incorporating credit into payments. So while we've seen BNPL explosion, but that has been mostly around the consumer data and the consumer space, but similar products which are cash flow based, which are flow based lending, will emerge for businesses as we move forward. They do exist now, but I expect that to be a big phenomena as we move forward. So new entrants, new products, new business models, those are the themes that I would leave with you.
Certainly, and totally agree. I think BNPL, PFM, the whole different way of credit, peer-to-peer lending, very well said, Nupur. So I think that's a delight to many entrepreneurs. I think Shashank hasn't taken overall market till now, and you still have some room to come in. On that, Shashank, if I may come back to you, and let me share this with you first. Many of top B schools students, they generally have an aspiration to be in the top 3 strategy consulting firms, which largely are known as the think tank for the industry. Any transformation, any change, and that is where the company participate with these think tanks and therefore make the change happen in a realistic manner. Now, with so much happening in fintech space and you being a practitioner of it, how do you see strategy consultants adding value to today's fintech, and what will be your one advice to them if you have to offer?
For a lot of fintech and fintech companies and startups, right? They are the change makers, right? They are usually the challenger brands, and operating at a curve of high growth, and at the same time figuring out what all things they have to do at the same time, right? So I think the typical analogy that's thrown around is kind of flying a plane while also trying to change all the parts of it that is there, right? So usually what I've seen in the industry working really well is for a lot of the strategy folks, and we hire quite a few as well, working with those companies to figure out and operationalize different parts of the company and set it up in a way which is really relevant for the field, for the growth rate, and for the customers that are there, right? So as we are expanding our horizons into to international expansion or to lending or to various other places, right? I think we leverage a lot of strategy folks from various IMs, right, to kind of build out that roadmap, do the market research that is there, figure out like the composition of the team, the budget, the PNL, the growth projections, and a lot of those is really helpful for taking the decisions for the stakeholders and for the CXOs, right, as to whether we should invest, what should be the story that we should be thinking about, and what should be the vision of the company itself that sort of keeps on changing and evolving as these pieces fit into the picture, right? I still kind of think that there's not enough intersection between the big strategy firms and the startups in general, because I think the strategy firms are still very much indexed towards towards the traditional industry, sort of trying to modernize that is there, right? And that is why what I usually see is a lot of talent export from there to the startup ecosystem, and that works out really well, right? What I've also started seeing a trend today is that if you are able to embed yourself as a person in a high growth startup, then the kind of exposure and the kind of growth that you get usually outstrips the strategy firms and gives you a much better footing in terms of doing your own venture or being ready for an exec position in future.
Very well said. Very well said. I'm sure the last semester or the last 2 semester folks are hearing this very cautiously. On that note, before we open it up for audience question, one last question to you, Shanti, and this will be a miss if I do not ask this. You have been a role model for many women entrepreneurs in the country. You also created a women investor network recently.
Yes.
What's your advice for women entrepreneurs, and how do you see this landscape growing in the country?
So my advice to women entrepreneurs is get started. I think this is the best time to go found a company. I think there is a very, very good nurturing ecosystem today. I think people are a lot more available with their time. They are very, very generous with their time and support, right? And I have personally, again, this might just be my personal kind of observation, is that if you are building a good business, if you're solving a good customer problem, you will get funding, right? It does not matter whether you're a woman founder or a male founder, right? Yeah. And that has been my belief, because I think at the end of the day, I mean, if you are building something which is very valuable, you will have people who will want to invest into you and kind of get the returns out of that venture, right? But of course, there is a lot more to be done on the women in investing side. So we have 10,000 investors today, Saurabh, from 60 countries. And this is not just an India problem, right? This is a global phenomenon, because we have investors from 60 countries and less than 25 women investors on the platform, right? And that is where we said, in order to help our women founders, we also need to bring more women into the investing frameworks, right? And have had very good success. So we've run 2 cohorts. We've had about 70 people participate. Almost 30 have already started investing, right? So I think it is just about, probably shining the torchlight on that particular aspect, and then we will start to see progress. So I am very, very optimistic. And I see some amazing women founders. I think times have changed, right? I don't think a lot of very good women founders are looking for validation from people on whether they should become a founder. They've already taken the first step. And I actually think this is the best time to be a founder in the ecosystem.
Very well said. Get started. Yes. Is the keyword for the evening. Yes. Awesome. So, with this, let me open it up for a few of the questions on the audience side. And Nupur, if I may request you to answer Manas. You being a practitioner, he wants to understand, will fintech complement the traditional banking in future? And will be seen as a hybrid model in place, or will traditional banks slowly but gradually become a relic of the past?
No, the banks are not going anywhere, rest assured. They've survived many downturns, many cycles, and they will continue to be. But what is likely to happen is that they will have a different role to play. End of the day, the money containers continue to be bank. They are the ones who take deposits and lend, and the fintechs are a layer above them. So but the other important role that they play is the entire compliance role, which actually fintechs do not want to play or find it very costly to play. So fintechs will continue to serve the micro markets, or segment specific products will come out of them. But the banks today are doing four things in various capacities. Either they're acquiring fintechs, like we saw a free charge getting acquired by Axis Bank, or they are hiving off their own fintech SBUs, the way Stancy and HSBC has done. The other two things which are happening is in terms of investing in fintechs. A lot of global as well as Indian companies, Indian banks are doing that, or they are forging alliances. And HDFC Paytm news was just 1 week back. They will continue to, get a lion's share of the entire fintech ecosystem, and they will continue to thrive and survive along with fintech as they become more open to giving access to fintechs, their APIs and their services. So they're not going anywhere.
Awesome. So Manas, your money is safe in the bank as well as you can incubate a fintech. So with that, I think Shashank, there is a very affable narrative on the chat from Jay Prakash. He's founder of Dhan, a technology-led investing and trading platform. And he has been using Razorpay for paying and payouts of client. And he says it's absolutely seamless experience.
Thanks a lot, Jay. I kind of want to share that, just the things that we have simplified, let's say on the payouts product side, right? And today, we kind of power like almost 5 to 7% of IMPS payouts in the country, right? Entrepreneurs like, Flipkart and Ola spent almost an year or more solving the payouts problem, and they could solve it because they had a lot of technology resources that they kind of threw at the problem and built those rails. And that's one of the reasons that they scaled up, because they were able to solve those problems and their peers couldn't, right? But today it's, obviously there's a much more expectation from entrepreneurs to solve these challenges from day one, right? And that is where like Razorpay plays to that role, because we kind of democratize access to these technology platforms and make them really simple to access and utilize, right? And today, like on the same payouts, like most businesses can go live within a day or two, and that's the change that has happened, right? Within a period of 5-6 years, what took companies like Flipkart almost a year to solve for, most entrepreneurs today can solve it in a day and just focus on the core business problem that they are solving.
Certainly. I think that's a very innovative way of thinking it through and fixing things much earlier with frugality in mind. I think that's the way for an entrepreneur to look forward to. On that, the last question for the evening, since we are sitting on top of our, and Shanti, this is for you. How do you see equity investing as a space which is underpenetrated? Less than 3% of the population invest in the capital market directly. And this is from Jay.
Yeah, so see, if you look at globally, private markets has outperformed public markets, right? But private market is also the highest risk asset class. It is not for retail investors. Unfortunately, because of the risk assessment and attached to this asset class, it is only available to accredited investors. And I would actually strongly recommend is, while you talk to founders and while the startup scene really looks, very, very glamorous from outside, there is a lot of hard work which goes. There is also very, very high risk when you start becoming an angel investor, right? So about 80% of companies shut down. So there's a very, very high probability of losing capital. And I think it will stay at, I think 3% is a very good number, if that is a number we have. But, this is actually available only to accredited investors who have play money, who are actually willing to take the risk and who are comfortable playing in this asset class. Again, I am very pragmatic. I do not like to glamorize angel investing because we have to be real about the outcomes which gets created, right? But again, this decade will probably see angel investing go online, go mainstream, right? As well as a lot more people will enter the space, right? But that does not take away the risk factor of the asset class.
Very true.
Yes.
Very true. It's a hard-earned money, Jay, and everybody will be very thoughtful about it. So do create very nice products that will solve real problems. And on that, Nupur, Shashank, Shanti, I want to thank you on behalf of whole IMA community and the country who is listening you. May I request Professor Anurag to come and say vote of thanks.
So thank you, Saurabh. I want to thank all of you. I mean, Nupur, Shanti, Shashank, and Saurabh for a great session today. Of course, for coming here and sharing your expertise and perspectives with us, and which is of course very valuable, as we can, as you can imagine. Even before we started, we had a very daunting task of trying to cover a very broad landscape, and it will any day be a huge challenge to fit in enough about fintech in 1 hour. But I think we have been able to touch upon a lot of areas and leave all those who joined in today, as well as all those who are going to see the video later, with valuable information which they would have been very hard pressed to get otherwise. And those nuggets of information and wisdom of a lot of hardships that you all went through personally, a lot of things that you learned personally that you've shared today, and a lot of the other people who are are looking to walk the path and walk in your footsteps will avoid. And that's a big blessing for a lot of these people. That's a very valuable information, and I thank you all for coming here and sharing that with us today. So thanks again, and have a very good night.
Well, thanks. Yeah, thanks to Saurabh for an excellent moderation. I think the time was really well managed. And thank you for having us.
Thank you. Thanks.
Thank you.
Thank you, Nupur, Shashank, and Shanti, and thank you, Saurabh and Siddhant, Anurag and Viti. Very well coordinated session. And I was also looking at YouTube. There were quite a number of views there also. So good. Thank you. Thank you, everyone.
Thank you so much.
Professor.
Thank you. Bye.
Thank you.
Thanks a lot.
Thank you. Bye-bye.